So let's talk about the DOW now. Now the DOW is something we haven't traded in a long time, but I think it is certainly worthy of attention at the moment. We have just this week exceeded the all-time high printed here at the beginning of the year. What is interesting about the DOW is the fact that we have multiple completion point at the moment. Not only do we have this false breakout here this week, given or exemplified by the tail of this bearish pin bar reversal, we also have A, B, C, D completion points coming into the level like so. Let me just show you. There we go, 1.618. But what is even more telling is the fact that if we go down, or up a time frame should I say, on the monthly time frame, we can see that, and this was brought to my attention by Larry, who is a very good friend of mine, who is also my mentor. He's been trading for about 5 decades, even more. So I noticed the ABCD pattern on the weekly, and he brought my attention to this enormous ABCD pattern on the monthly time frame, which starts all the way back in this crash of 1987, as you can see just here. So if we draw the Fibonacci extension from point B to point A starting at the 1987 crash, you can see that it is rejecting this point here. There we go. We can even take the Fibonacci extension from points B to C, and we can see that it's rejecting 2.6, which is, it's very seldom that we get that as an extension. 2.6 is usually, or 2.618 should I say, is usually 1.618. Let's go down to the weekly again, as we're trading this one on the weekly. So you begin to see now how we've got kind of multiple time frame correlation here. You can see that all these Fibonacci levels are overlapping around about here. So if we do get the close, and I suspect we may on the weekly time frame, then this could potentially be a high risk entry for a reversal short. Let's have a look on, see what the indicators are saying. Okay, so on RSI setting 6, we've got a lower high here, whereas on price we've got a higher high. That's bearish reversal divergence. So what you can do if you did like the look of this trade, and please bear in mind this is a high risk reversal trade setup, is given that it's a false breakout, you can essentially enter at the midpoint of this bearish pin bar reversal, stop loss above the high, and if you're triggered into the trade, by the time the market, if it does go down, hopefully it will, if it does get down to what would have been your original entry point, if you traded it in the way of the standard entry with your entry just below the low, you would have already made 2%. So if you do the advanced entry, and if you do decide to do the advanced entry, then the likelihood is that you could very well get triggered, given that we've got a decent overlap here of the previous 2 days. And also on the 4-hourly time frame, we've got what looks like it could potentially be the makings of a head and shoulders. Got left hand shoulder, head, right hand shoulder, maybe. We'll have to find out, obviously, but this does look very head and shoulderish, that's for sure. So if you do enter at the midpoint on the weekly time frame, that's an advanced pin bar reversal entry. It's far more aggressive, far more profit potential to be made, that's for sure, as a reversal. But if you wanted to essentially get a safer entry, then place your entry to sell just below the low of this week, stop loss above the high, and in both instances, if as and when you're ready to, well, if as and when you've made a one-to-one, then scale out of the position. I think looking at this, if the Dow does go down, please bear in mind the Santa Claus rally is quite a predictable time of year. When we see the bull run of stocks, I know Christmas is about 3 months away, or just under. We've still got some time to potentially make some downside movements if this does go down, and like we've seen before, the movements tend to be quite sharp and rapid when the Dow does decide to go down. Okay, so that is it with the Dow. High risk trade, by all means take it if you like the look of it, but if you want a high probability trend-based setup, then this certainly isn't the one for you, because it's trading a reversal. Okay,